Hello everyone and welcome back to the channel. Today's video I'm going to be going through all the stocks that I brought in January of 2026, breaking down why I brought them and how they fit into my overall investing strategy for this year. And as always, this is my personal journey, not financial advice, so please do your own research because I'm not a financial advisor. So let's jump straight into it. Just let you know though I have a free shares for you opportunities. So before we get into the stocks, quick reminder, if you're not investing just yet or you're looking for a new platform, I've got free share links for Trading 212 and Robinhood in the description down below, where you can get free shares just for signing up. That just helps support the channel at no extra cost to you. So definitely check those out, especially if you're going to start investing today. So links are in the description, and let's get into it. So as we can see, no sales this year so far. So in January 2026, I did not sell any of my stocks or my positions. So I haven't really sold anything, no sales, no realized gains. I'm just fully focused on building and compounding. So trying to get more compounding interest. So not trading in and out. So in January 2026 buyers, we are still adding, and first up two is Carnival Corporation, ticker CCL. There is a London or New York, a London Stock Exchange one, but I've gone for the New York one because I just prefer it in the dollars, and I prefer just keeping everything the same. And when I started on eToro, eToro didn't have the option to be investing in GBP, so my portfolio is actually in dollars. So, but I have put both in there so you can see what roughly I've got in terms of both currencies. So this is a stock I'm always added to, and January was no different. Carnival is a long-term recovery play for me, and they're doing quite well lately on that because the cruise industry was hit really hard, especially during a few years ago. But Carnival has been doing really solid job with its recovery. Demand is still strong, operations are improving, and most importantly for me now, the dividend has been reinstated. So dividend is now back, which helps me with trying to get a dividend income as well as growth. So this gives me a confidence that realistically this recovery still has years left to run basically, but they're doing really well. That it's going up and up, and I believe that I'm happy to keep adding to this because I don't want to time a perfect entry for this stock because I think in a few years' time it's probably going to be double the price that it is at the minute. So as you can see, I added 1.14773 of shares, which was a total buy of $33.95, which equates to £25.16. So far I'm just below the 50 share mark with a total of just over $1,000 invested, which is £810. And the total value position is actually up at 1,587.64 with a position of £1,176. Next up is Pets at Home, and it's a new addition to the portfolio. So this one came onto my radar as undervalued UK stock with quite a bit of solid fundamentals. A little bit of the revenue has flattened out a little bit, but I still think it is a solid company for this year. And people don't stop spending money on their pets. If you've got a pet at home, especially like we have, you don't really want to stop spending money on pets because the pets get on well. The pets need dog food, the pets need toys, and plus as well, pets at home they have a vet like a vet insurance thing on the other side. So they have Medicare and all that. So they've diversified. So they're not just a shop where you go in and buy stuff. You can actually have vet insurance and what you call it, healthcare. So that's quite good. This is why I like Pets at Homes. And I think realistically, despite the short-term pressures, the underlying business is still strong. And at the price I brought, I thought it offered a bit of margin of safety, which I've got, which is exactly what I look for when starting a position because I've started a new strategy because I don't want to just keep picking stocks and buying them just because I know the name, because even if I know the name, they might not be great companies to buy. So this came onto my radar, onto my strategy. So this wasn't just a hype buy, it was a fundamental first and long-term decision. So as you can see, because it's a London stock or a UK stock, so $100 actually gets you 37.8 shares or 74.1 pounds. So as you can see, it's a new stock. So basically, 37.8 shares total with the $100 invested, and no profit gain at this moment in time. I will add what the profit will be in next month's or February's, even though we are in February, but I thought we'd get it all done just after when we get into Feb. Just because then if I keep adding the total value and all that, then we're not quite sure when or where it was. So I'd rather just do an update each month. So if people are wondering what I actually track my stuff on, I know a few people use Snowball Analytics, but for a free option, if people are wondering, I use Stock Events. So as you can see, this is stockevents.app on the computer. You can use your phone as well, which is really good. I will leave a link in the description if everybody wants to check this out. So it lets you anticipate earning dates, dividend announcements, stock splits, and key events. So for example, when I know that if I look at Carnival and Pets at Home, I can see when the next earning release is the dividend pay date approaching, is there a scheduled investor day or update, and is there any historic events that maybe have impacted the price movement. This helps me with more informed decisions, not just buying randomly, but expecting what might be ahead. As you can see, the tracker is slowly climbing. This shows consistency matters. Small regular contributions really do add up over time. As you can see, I've got a total position of 2,595.64. With since the year to date, I'm actually up 28.6%. Now I do have more positions. There is my watch list on the right hand side as well, so they're not actually just my positions, they are the watch list of what I've got on my radar so far, but we will dive deep into that at some point. And then the dividend tracker mark, as you can see, this is one of my favorite sites because it shows you what you're going to be getting each month. Right now my portfolio is just protecting just over $60 a year. And my target for 2026 is $100 in dividends a year. So a little bit off that, but hopefully with a few ads this year, we could hopefully get certainly up there and hopefully hit the $100 mark. Once again, it allows you to see the upcoming dividend declarations, ex-dividend dates, record dates, and pay dates. And as you can see, the payments of what you're going to get in each month. Because I'm not just holding out for growth, I would like to have some little bit of income, especially with dividends, where I can buy some future buys with the dividends that I get. Because the goal isn't becoming rich overnight, it's about building reliable income over time that grows every year. So as you can see, my total buys plus sales. So I just invested just under $134, which is 99.26 at the current GB rate, but I did actually put £100 into the portfolio. So as you can see, with the conversion rate, I actually lost a little bit of my investment money, but you get that back with the compounding, which is quite good indeed. So nothing just crazy, just staying consistent and sticking to the plan for me. So with no sales, we were up $133.95 into the ads of January. So my investment strategy this year for 2026, well, to summarize, I want to consistently keep adding from my part-time job into my investment account, treating it as a non-negotiable habit and paying myself first. Actively searching for undervalued but fundamentally strong companies with a clear margin of safety before investing. So Pets at Home was meeting my criteria for this month and hence marked as a buy. Consistently adding to my core conviction position, which is going to be Carnival Corp, throughout the year, while maintaining a discipline around position sizing and long-term outlook. Building a diversified portfolio with a focus on quality and dividends, balancing growth potential with reliable income. I would like to reach a total portfolio value of $5,000 by the end of the year through consistent contributions and smart capital allocation. And once already covered, achieving $100 in annual dividend income, prioritizing sustainable yields, dividend growth over short-term gains. So pretty much my goals are simple: $5,000 portfolio and $100 per year in dividends. So I hope you guys did enjoy, and if you want to follow along with this journey, make sure you leave a like, hit the subscribe button, and follow for regular portfolio updates. I'll be posting new videos every week and showing exactly what I try and buy and what I'm looking at buying, hence why the stock deep dives. And if you want to see one of those, I'll leave it on the end screen right now that you can click and show you what I look for in companies. So I hope you guys did enjoy. Thanks for watching, and I'll see you on the next one. Goodbye.